Good morning, everyone. Welcome to this, just wait for you to...
Wait.
Oh, okay.
He's not ready yet.
No, he gave me the thumbs up.
You just talking to yourself then, how was that?
Are we good? Yeah, okay. Oh, right, some of them not got headsets on. Do you want to put your headsets on, guys? If you put your headsets on, we're ready to go. Okay, excellent. Well, good morning. Welcome to Automotive Management Live. Welcome to this silent disco where my panel will be dancing their way through this topic of thriving through change, navigating the manufacturer landscape. A meaty subject, I'm sure you'll agree. But I've got a panel of knowledgeable experts that will talk through this subject over the next 45 minutes. So we have Tony Whitehorn from T. Whitehorn Consulting, but of course also the former MD of Hyundai UK, a man who knows a thing or two about building brands in the UK. We also have Steve Young, the Managing Director of ICDP and also West London. And we have Dom Tribe, Automotive Sector Leader at PwC. So just for a little bit of context, over the past 5 years, the UK new car market has gone from something like 40 or so car brands to more than 60. And since Great Wall Motors launched in 2022 as GWN Aura, we've seen another 10 Chinese manufacturers begin selling cars here under their own brands, and more will follow in the coming months. It's having an immediate and dramatic effect on the market. So BYD launched 2 years ago. So far this year it's registered 39,000 cars, up 550%, taking almost 2.3% of the market. You know, it's registering more than Tesla this year, and the CLU was the sixth biggest seller in September. You think that's impressive? JQ only launched earlier this year, already registered 21,000 cars to the end of October, 1.2% of the market. The JQ7 was the fourth biggest selling market in the September plate change month, and the sixth biggest selling last month. More than 6,000 in those 2 months alone. And then its sister brand, Omada, more than 16,000 registered this year. Between them, they've taken around 2% of the market. You know, and even more so than that, Chery, which owns those two brands, only launched in September, took 0.4% of the market in its first month. Last month took 1%. I mean, these are unprecedented times with these brands that are building up registrations, definitely call them registrations, at an unprecedented rate. You know, there are more brands that are looking to enter the market. Some of them are out on the floor today. So in this session, we'll look at which ones will be the safe bets, which ones will give a boost to those dealers, which ones should you maybe stay clear of. Please get involved. There's an opportunity to ask questions. I will look up from time to time. If you want to ask a question, put your hand up. A mic will come to you and just say who you are and read your question out. So let's get started. So as I say, you know, we've got 11 brands already launched in the UK. There are more to come. You know, the ones that I've not even mentioned yet: Leap Motor, Geely, XPeng that's out there on the floor, Changan, Verizon also out there, and Skywell. We've also got Aeon out on the floor today, Zeekr looking to come, Hongqi, and also, not just from China, we've also got Cadillac looking to launch in Q1, Q2 next year. I think maybe the third time around it's attempting to make an impression in the UK. So, you know, a lot of brands, a lot of dealers for dealers to get their heads around. You know, Tony, you know, exciting times, but also, you know, it's a lot of brands. Can we sustain them all in the UK?
Yeah, I think that's really interesting. I think we are in a marketplace today that is unprecedented. What is to me really interesting is that if you start with, because you're asking, you know, can this market sustain these number of brands? And in fact, I was looking at, in 2017 there were 46 brands, today there's 73 brands, that's a 70% increase. But it's not a 70% increase in terms of manufacturers. What is happening, as you said with Chery have got 3 brands. So you've got this sort of fragmentation, and even some, like my old company, Hyundai, you've got Hyundai and Genesis. Yeah. So there's more brands that are available. But if you think about the large number of OEMs that are out there, is there more coming? The answer is yes, mainly from China. Is it sustainable? I think you have to start by looking at the consumer. Is it a good thing to have more competition? Answer, yes it is. Gives consumers more choice. Is it good for the national sales company to have that? The answer is, yes it is. And the reason being, whilst the NSC might not like it because their margin goes down, from a competitive point of view, it makes them more agile, it makes them more intuitive, it makes them more inventive. Both from an NSC's point of view, from a consumer's point of view, actually it's good for both of them. You get better NSCs and more choice for the customers. And finally for the dealer, is it good? Absolutely, it's good for the dealer as well. Because the dealer has more choice now, and actually the dealer can be more agile. The dealer is enabling, he's got a suite of choices that he can have, and the key for a successful dealer is, am I agile, am I flexible, to enable me not to be hamstrung by previous franchises, but to enable new franchises to come in. So bottom line is, it's a good thing. People don't like it, but it is a good thing.
Dom, a good thing, obviously there is more choice. A lot of these brands are bringing in electric products as well at a lower price point. What's your view? Is this good news for the market?
Yeah, absolutely. I think, with the cost pressures that the public are experiencing at the moment, having more choice and at a lower price point, it can only be a good thing. I think we'll probably will see a bit of a saturation, but I think the multi-franchise model, as Tony was talking about, makes sense. People want to hedge their bets a bit in terms of the franchisees, and I think we'll probably see that develop over the course of the next few years as part of that. I think there is a trickle-down effect. So there is a price war currently happening in China that's since 2023. So we will see a race to the bottom on price. Again, that's a good thing for consumers. Not all of that will flow through because obviously we have distribution costs, logistic costs, tariff costs, right-hand drive conversion, etc., etc. But actually a lot of that will flow through. And again, it's a good thing for the consumers, ultimately a lower price point. And I think customers are a bit more savvy these days in that they just want a really good, reliable product that is at a good price point. They don't really care where the product is made these days. Often they don't even know where the car is made. And so I think it's a good thing for the market.
Steve, got a couple of hats. Are they both happy?
Yeah, both hats are happy. I think that the comment that Tony made about dealers have a choice, I think is important because we tend to focus on should I take on X new brand, but there's another side to that is do all the brands that I have at the moment work for me, and the market I don't believe is going to go up as a result of all the new brands coming. Maybe at the margins some people will be shifting from a used car to a new car because it's better value. But in general, the market's going to stay the same, and so the share of at least some, probably all of the incumbents is going to drop. And so as a dealer, you need to be looking at where the opportunities are, where are you going to make your best margins. And I think that with the new entrants, you mentioned Cadillac as one extreme, might be a fun little franchise, but you're not going to make a fortune out of it. But if you look at the BYDs, the Omoda JQs, then there is money to be made. It's a good commercial proposition. I can say that from an ICDP point of view. We've spoken to a lot of dealers across Europe. They're making money. It's profitable from day one. They get a return on quite modest investment in 2 or 3 years. So it's a good deal. As a dealer, I can tell you that we're like a year ahead on our business plan. We're not going to, we only started in end of March. So we're clearly not going to make a profit in year one, but we'll certainly make a profit in year 2, and we'll get close in year 1, which is absolutely amazing. And that's not because of, the skill of myself and my team, or not only that, I'll say, but it's got a lot to do with the fact the product's there, the demand's there. To Dom's point, the customers that we see, at least, have done a lot of research. They absolutely know the cars are made in China, and they don't care. Now, obviously, the people who do care they're made in China aren't going to come into our dealership, but they're coming in. They're well informed. They know the product cycle. They're asking about the products that are coming next year, as opposed to the ones that are in the showroom now. They just want to see, feel, touch, know that it's actually as good as the reviews say.
Staying with you, Steve, just building on that sustainable element, is it likely that we will see some exits, either from the Chinese brands themselves coming over? We know some of them are over in China. There is a bit of a cull at the moment. A lot of them aren't very old. Maybe 4 or 5 years of history. They're here. They're gone tomorrow. Could some of that happen with the brands that are coming to the UK? Could we see some of the established brands exit the market? And then picking up on Tony's point around this kind of consolidation and co-ops as well, are we likely to see more of that?
I think we'll see all of the above, basically. I think the Chinese in China have not demonstrated a great understanding by our way of thinking about brand management. So brands become models, models become brands, and so you could see some of that. Is it sensible for Chery to have a Moda and J.Crew and Chery and one or two others still to come? Should BYD have Densa and Yang Wang, potentially others to come? So that's slightly disruptive. More disruptive, obviously, is a brand comes in and exits. As has happened in the past with Great Wall. I'm sure it will happen with some of the others who are here, and it will happen with the established brands. Either they will, the pressure on them in general will be so great that they cease to exist, or they will withdraw from the European market at least, because they got strengths elsewhere, but not enough in Europe to withstand this pressure.
Dom, any sort of sense of which brands might be most at risk?
Let's listen to this, Dom.
I just feel like my P45 coming in. I won't necessarily pick on a brand. I know it's a very political answer, but I think ultimately it's those that can really establish themselves, scale quickly, but not too quickly. I think there is a pace at which is sensible, because ultimately, if you, as we're seeing in China, if you grow too quickly and you're into the sort of high single digits of percentage point growth of market share, ultimately you start a price war because you're trying to steal more and more market share. And I think what we want to see here as well is something similar. It's a bit more of a sustainable, steady growth. I think those brands that are scaling sensibly, have the sort of brand reputation that they can back up, have the sort of aftercare and after sales and availability of parts, etc., will do well. I am very interested in the sort of the Chery story, because like you say, how much cannibalism is there likely to be in their own brands? How do they differentiate between their different product ranges as well? I think that would be quite an interesting case study, but obviously it's still quite early days yet to see as part of that. And obviously, Cadillac and people like, I think, again, we're a nation that loves SUVs, so I think Cadillac probably do quite well. But again, limited volume, there's a limited market for something like that. So I know it's a very politician's answer, but I can't really pick out certain brands or get in trouble.
Tony, do you want to go there?
Tony might be able to.
Yeah. I think that what you're going to see, particularly in the Stellantis group, more of a consolidation, to be honest about it. So if you look at, I'll choose two brands without being too derogatory about it. But if you think about something like Fiat, they were selling 40,000, they'll sell 8,000. They're selling 8,000 at the moment, and Citroën 40,000, they're selling 16,000. So I can see that the Stellantis model of having them all in one showroom type of situation, like we've got a Gypsy Corner, like Hendy have got at Bournemouth, like Greenhouse have got, is actually a good model for them, because it becomes much more financially viable for the dealer and for Stellantis as well. So I think that's what you're going to see. You're going to see much more of that consolidation, more than that. That brand will leave. I don't think you will see that. I do think they will see that consolidation element though.
So just picking up on that a little more, dealers expanding with franchises isn't anything new. You're talking about potential consolidation within an existing brand, so Stellantis brands may be under one roof. But we are seeing that dynamic evolve a little bit. We've seen Peoples up in Merseyside, shift out some of the Ford space for some of the Chinese brands, for BYD and I think Omida, J.Crew. So do you see more of that happening with established brands making way or sitting alongside some of these new entrants within showrooms?
Yeah, I think what national sales companies should do, easy for me to say this now, is not try and build these vanity projects. It sounds strange me saying this, whereby you have these big gym palaces and this is what the brand statement is. I think that the NSCs and the dealers need to be more flexible to enable a multi-franchise type of situation. And that doesn't mean that you're watering it down. I was with a dealer group recently, and they said, yeah, we've done that, but we absolutely keep the management very, very separate. So the experience of the people within it is a separation. It's not necessarily the actual framework of the building.
Yeah. Steve, would you concur?
Yeah, I think that to some extent, that those who exit will be dictated by the dealers. That the dealers need to make a return on the property, make a return on all the investment they make in people and systems. And if they're only selling, 40 cars a year of a particular brand, 100 cars a year of a particular brand, talking about sort of volume brands, then it's not going to work and they're going to exit. And I think that the brave NSCs who are in that situation should recognize that proactively. They should take a reality check. We're not a 2%, 3% market share brand anymore. And we've done work in ICDP with help from Urban Science that says if you take a 120 dealer network to 60 in the UK, the drive time goes from 17 minutes to 21 minutes. So if I am realistic about my prospects and decide to proactively have the network, then my dealers suddenly double the volume. Not precise, clearly, but the customers are making their brand choices largely online, one brand or two brands. So they will travel that extra 4 minutes to get to the dealer. If the dealer's that way as opposed to that way, not an issue. Mm-hmm. And they need to be doing that, because if they just let the 80, 60, 40, 20, the dealer's going to walk, and then they end up with no representation and unplanned changes. They end up strong somewhere and absent somewhere else. So the NSCs of the established brands need to get hold of that, need to be proactive, need to manage to right-size the network to maintain the economics for the dealer. If they don't do that, the dealers will go anyway, and they'll be out of the market.
Yeah, and that's an interesting point, particularly with the fact that all the Chinese brands that have come over have adopted a very traditional franchise dealer model. So they are all looking for space. Mm. I mean, it feels like there's possibly not enough space out there. So something's going to have to give somewhere along the line, whether it's from both a new car sales or a sales perspective, showroom perspective, but also after sales as well. I mean, where are they all going to go? Is there enough space?
Well, largely not. And if I put the Auto West London hat on, operating in within the M25, then there's clearly a shortage of space, and it is a land grab. And when I speak to representatives of the new brands, then they admit that they are compromising in terms of investors, are compromising in terms of the exact location and size of sites in order to get representation, because someone back in China has said you will have 100 franchise points by the end of the year. Yeah. Is that right? That's a separate discussion, again subject to some more ICDP research. But we're sort of actively in discussions with 4 or 5 brands, established and new entrants, and it's all about, can we find space where they've got open points, and whoever finds that space first is going to get the gig. Yeah. And that's as simple as that.
Dom, I mean, are you expecting new sites to open then if there's not enough existing space?
Yeah, absolutely. I think even though there has been some retrenchment and sort of some rationalisation of sites by some of the legacy sort of traditional OEMs, that's just not enough. So those would be probably quite attractive because sort of brownfield sites, they're kind of almost like ready to go. But I think you're right. There needs to be more space and more sites, and I think the market's dictating a sort of multi-franchise model anyway. So I think it makes sense to put sort of multiple brands under one roof, not only because it helps hedge your bets if you're a dealer, for example, but also actually it's just how do you get more brands under a limited number of square footage of footprint.
Mm-hmm. As I said, they are following a very kind of franchise dealer-led model in the UK. Over in China, they do operate all forms of models, direct, agency and franchise. Do we see some of that potentially coming to the UK once they get a foothold? They'll start to migrate down an agency route that's, I suppose, is still a little bit tried and untested, or tested and unsuccessful. I don't know. Dom?
I think so. I think again, and Neo, I think was a good example we sort of touched upon as well, which is direct to consumer has been sort of tried with sort of varying degrees of success, and I think ultimately the market will dictate how they want to be sold to. And I think what we'll see will be a sort of hybridisation of that. And I think what we might find is that there's a more traditional footprint that needs to be established through the sort of franchise dealer model. But then as they become more established, actually they can offer maybe potentially different services or different elements of that sort of experience or sales cycle through more direct approach as part of that. And we sometimes see it. So it might be sort of leasing, for example, might be more direct, or fleet, kind of fleet sales, etc. Might serve better through a direct model. But I think the sort of hybrid model is probably the sensible one, because again I think the Chinese brands really want to sort of think about the different levers they want to pull, because if you're entering a new market, you don't really know how well you're going to succeed in that market, and you want to be able to pull different levers, i.e. how much inventory, working capital, balance sheet do you take ownership of, how much risk you take, how much autonomy and control you take. And I think just choosing franchised or dealer, direct, is a bit too binary. So I think there'll be a bit of hybridisation, and then I think as they become more established, they'll start to pull on different levers and will move either side of the spectrum.
Mm-hmm. Tony, I mean, you had some success at Hyundai with direct models on specific models. I mean, do you see that evolving in this country?
Yeah, no, I totally agree with Dom. I do quite a bit of work with some of the Chinese manufacturers, and they want to get into the market quickly.
Yeah.
The way to get in the market quickly is by utilising the dealer network. We've got a very, very good and sophisticated dealer network. So utilising that is much easier than actually trying to go direct initially. So I totally agree with you, Dom. I think that they'll be in there with the franchise model. They will then start to tweak it, just like all manufacturers are tweaking it. In terms of, there's some very good things about direct and there's some very poor things about direct. So it's almost like a hybrid that you end up doing within the whole framework of it's not binary, it's not franchise direct, it's actually a combination of them. And I can see that what the Chinese are doing, they've come in with a franchise model. It's easier to have that just an existing footprint. So from there, what else can we do?
Mm-hmm. Yeah. I think just to add to that, in Germany, a number of the Chinese brands did try different approaches, and they pretty universally failed. And if you look at the market share of the Chinese brands in Germany, it's low. And the reason for that is not because the Germans hate Chinese brands, it's because their market entry strategy failed. And the advantage for the Chinese brands, any new entrant brand, of working with established dealers, you mentioned Peoples as an example. Peoples has been selling Fords to people in the Northwest for decades. It's a trusted brand. Who's the most successful dealer brand in the Automotive network? It's Arnold Clark. Are we surprised? No. So I think that the franchise network offers a lot, and will they change it in the future? Possibly, but the big failure of agency for those who went down that route and had issues is they did not understand how much resource they needed to have, how much knowledge they had to have in the NSC to run agency. And the Chinese brands are still startups. They can't suddenly bring in all that expertise about the market. They would need to do direct well.
Mm-hmm. I'll come back to you on that point in just a minute. First opportunity, looking out into the audience. If anyone has any questions at this point, let's say just put your hand up and a microphone will come its way. A slow start from the audience, but we'll come back to you. There's still plenty of time. Just picking up on that point around expertise, I suppose one of the things that the Chinese brands have done so far is bring in local market knowledge when it comes to the NSC. But I mean, is there anything the dealers need to know in terms of culturally, how they should go about dealing with these companies if they're looking to take on franchises? Tony, you're smart. I'm going to come to you first.
Yes, I mean, the answer is yes, and it is the right strategy to take on local people. That is absolutely the right thing to do. Behind that, there is always going to be, I had it with Toyota, and I had it with Hyundai. There's always going to be an influence from the mothership. That's how things work. But if you have a very strong national sales company with a very strong indigenous manpower, actually you can do a lot. We managed to do an awful lot by virtue of Hyundai. It allowed us to do it. So it does depend a little bit on some of those franchises as to what is the reality of the power that the OEM actually has on the NSC. That's been my experience. And let me tell you now, if you're successful, they leave you alone. It's when you're not successful, they're all over you.
Yeah. Steve, any sort of learnings from the sort of conversations you've been having with those companies?
I think the most important thing is just to recognise that they are startups themselves. So don't expect perfect processes, don't expect systems. We had to educate them that it wasn't helpful to send us a list of vehicles as an image file. An Excel file that they'd taken the image of was actually much more useful to us. So, they're startups, and that's perhaps the most important influence. Yes, they're Chinese startups, and therefore there's huge pressure from headquarters, and lots of decisions are made in headquarters, and they're not negotiable. The decision to bring Chery in has not been made by the Chinese present in the UK. It was made in China, and you just have to accept that. So I think that those are the key things. I think from a dealer point of view, look at the people they've got, look at the quality of the guys who've been hired and how long they're hanging around for, and so on. That's a good sort of litmus test of whether that's going to be a stable organisation, a good one to work with.
Mm-hmm. Dom, earlier you mentioned pricing, and obviously the brands that have come to the UK so far have come in at a lower, not exceptionally low, but a lower price point with their electric product. They are facing a bit of a price war in their own domestic market. Do you feel some of that might spill over to the UK? Within my area, within Briers, who I work for, as well as Automotive Management, we've got Fleet News, and certainly talking to a lot of the fleets, they are seeing some, just describe them as generous discounts from some of the brands. So where do you see pricing going?
Yeah, and I think we touched on it before, but I think ultimately sort of downward because of that competitive environment. Again, I just think we need to be careful, because I think we've seen, and there's probably lots of case studies we can draw upon and infer from around when you do sort of have these campaigns of discounting and sort of price wars, actually what's knock-on effect in terms of residual pricing, in terms of the volatility in the market, in the second-hand market, for example. Because ultimately, to get the benefit of the sale, what do you then do in terms of jeopardising the after-sales and the second-hand market as well as part of that? And that's huge, right? So, the second-hand market is 4 times the size of the new market. So actually you need to be really smart about, if you are going to discount and have a price war, what does that then do to your residual value as part of that? And in some ways, it kind of maybe doesn't matter. Lower prices are good for consumers, but actually, how sustainable is that? Because actually, if you run a campaign, is that sustainable? And I think, yes, we will see some of that price competitiveness flow through, but it needs to be done sensibly and it needs to be done sustainably as well as part of that. And it'd be interesting to see with the UK government. Their stance, as of sort of late last year, particularly in response to the EU's anti-subsidy duties, for example. So this was the 17 to 38% tariff on top of the 10% flat rate. We're not doing that, and that's partly why you see a lot of PHEVs coming into the market, right? Because they're not touched or influenced by that subsidy tariff. But what we might see is a bit more protectionist measures by the UK government, which is to say, actually, at what point does it start becoming a bit unfair? Because obviously the EU have already moved and they've got a 5-year subsidy plan now. So actually, will we do the same, and when will that come into effect? Because ultimately, if you just keep driving prices down and the incumbents just cannot compete, you can't out-China China on a cost competitive basis, sadly.
Yeah. Tony and Steve, you both mentioned competition being good. How do you see the pricing, and is there a potential disruption from constant price cutting? We've seen it with Tesla, certainly over the last sort of year to 18 months, with a number of price drops that then obviously filter through to the used market and cause some lack of stability there.
Yeah, if you look at last year in China, they sold 27.8 million cars. They have a capacity to produce 50 million cars. So where are they going to put those? They're not going to America. So the next biggest market is Europe. Well, Europe's got between a 10 and a 45% tariff. We are a free market economy. That's how we are. And we have just a 10%. So yes, we have the right-hand drive, which is an inhibitor for some people, but actually the opportunity in the UK car market is actually very good for Chinese people. You're going to get many more Chinese companies coming in here. So do I think that there will be more price aggressiveness? The answer is yes, I do. I am not a big advocate of quotas and tariffs. I agree with it as a tactic, but not as a strategy. And I think that to me is where we've got to be careful. But the price push is going to continue.
Yeah, Steve?
I think there is a risk that the Chinese don't just import cars, but they also import a disorderly market behavior. The Chinese government is going to take action by the end of the year. When I speak to Chinese dealer friends or other contacts in China, they don't know what shape that's going to be yet, but it could include manufacturers being shut down, being forced to merge, controls on pricing and so on. I don't know the situation for all of the new entrant brands, but when I speak to some of them, then they are very aware of the issues around maintaining the residual value, because it's not something that happens in 3 years' time. It impacts you immediately because it affects your lease offer to the customers, and so they're aware of the need to manage RVs. I think they will try to be sensible in their approach to the market, but I agree with Tony. Tariffs only work if you're going to do something in the period whilst the tariffs are in place. And even at the level, up to 30% extra in Europe, that doesn't really touch the sides in terms of the gross margin on a Chinese product, landed price to retail, because the duties go on the landed price. So it's not as big as lots of the press comments would suggest. And so they'll just carry steaming on. And from a UK point of view, UK PLC point of view, if we were to put tariffs on, what action are we expecting any UK stakeholders to take in the period of those 5 years that somehow helps the economy? We haven't any manufacturers to protect anymore, sadly.
Yeah.
So I'm less certain that we'll see tariffs in the UK, and I don't think tariffs will work in the EU either.
Mm-hmm. I'm looking. Got about 11 minutes. Oh, there's a question right at the back.
So how are we going to hear that?
It's Tim.
It's Tim, AM's editor. Showing you all up. Look, we get a question from the editor of AM.
Oh, yeah.
I've got a question for you.
Oh, I can't hear anything.
Tim, you need to come.
I don't think that microphone's working down here.
Is this working?
Yeah. The audience hearing.
Come
to the front.
Working now? When working?
Or grab a headset.
Let me grab a headset. Oh. Cheers. Go on. Oh, just tell me what your question was.
We've seen Chinese brands come in, recruiting experienced UK execs from existing NSCs. We're now seeing more Chinese brands come in, poaching those execs from Chinese brands that have been here 18 months, 2 years. Is the talent pool big enough within UK NSCs to sustain the brands that are still yet to come in?
I'll kick off if you want with a point of view. I won't pretend it's an expert point of view, but I think the success of the Chinese brands will in itself unsettle people in the OEMs, and without being unkind, and you'll all know what I mean, within the better OEMs, it's one thing to jump a sinking ship, but when it will start to make a difference will be people look around and they see, the success of OJ, they see the success of BYD, the established success of MG, and say, what, maybe it's not such a smart place to be staying with brand X. And so it will open up a new talent pool. I think at the moment when people have been unsettled, they've already moved, it's relatively easy to move them on again. But I think the pool will open up.
Yeah. Tony, any thoughts?
Yeah, I totally agree with that. I mean, obviously, my ex-sales director, Guy Piganakis, has gone to MG. I've got people who've come from Hyundai, have gone over to JQ and Moda. I think that's a good thing. I think it's a good thing that there's a movement amongst the industry. So is the talent pool big enough? I do believe it is, because I do see that there's a lot of younger people lot younger than me nowadays who are coming through and filling up that space. And I think that the younger generations as well are much more agile, that they've been used to a digital framework than people like old like me. So I think that yes, the answer is there's enough people there. I think the industry is attractive enough to have those people in prominent positions as well.
And you can't have capitalism and free markets just on products, right? It applies to people as well.
It is. Dead right.
Okay, you've seen how it works. You put your hand up, ask a question, and then we can't hear anything. But if there's another... I'll translate.
Yeah, do translate
go
for
on.
us.
Don't make it too long.
Trying to do my lip reading.
Yeah, I was just curious because if we keep seeing Chinese brands come in and put more pressure on profitability and that continues as a crisis, what role is after sales going to play in the industry and what might that look like for Chinese brands specifically?
Oh, an after sales question. So, more brands coming in, putting pressure on profits for dealers. How important is after sales going to be going forward, and you know, what are the Chinese doing about after sales as well in terms of that?
After sales for the smarter Chinese brands is absolutely crucial. So they understand that if you don't have a good story to tell, then you're firstly not going to get the dealers and you're not going to get the customers. And if you do get them, you won't keep them. So one of the reasons why we signed up with Automotive was because we were confident that they'd done all their homework around after sales. And also the parent has got 3 years experience in Turkey working with them, which is positive. But from an economic point of view, if you've got a standalone dealership with a new entrant brand, and if it's predominantly BEV product, then your workshop's going to be, have tumbleweed going through it. So that's why the multi-branding makes sense. We have an after-sales site. OJ is one side, all branded. We don't expect that to be busy with much more than prep work, PDI work. The other side is Bosch Car Service, because I want to make money out of after sales. I need to make money out of after sales. I'm not going to make out of OJ for some years to come. So after sales is crucial on the sales side, but also you need to have an answer, a solution on the after sales side.
Yeah. And I think that multi-brand franchise is helpful as well, because it means you'll get the throughput of after sales volume through the door, as it were. I also think there's probably two elements to after sales. So one is the sort of operational side of things, which is the distribution, movement of parts, etc. And obviously that needs to be managed well. But I think there's also a marketing element, because obviously these are emerging brands. You need to sort of create consumer confidence, and actually how do you tell that story, as sort of Steve mentioned, and to create that consumer confidence so that there will be that support and that aftercare when you make your initial purchase.
Yeah, I think that the successful dealer, I keep on using this word, is the agile, is the flexible dealer. And they're the ones, as Steve has said, is that they're going to get some good sales from the Chinese brands and the new entrants coming in, but their after sales are going to be empty. But that's where you're then having the previous brands are going to have to keep your workshop busy. I think it's extremely challenging just to open a standalone site without any after sales. I mean, you're not going to make any money fundamentally, because there's zero absorption at the very beginning.
It's often said that Japanese manufacturers took, throw your own number in, 25, 30 years to get a foothold. Koreans kind of halved it, maybe 15 years. The Chinese,
Yeah, it was interesting because I was with Toyota in the 90s up to 2005, and we went from 47,000 vehicles to 125,000 vehicles, so it was great. And I joined Hyundai and we went from 27,000 vehicles up to 96,000 vehicles. Both of those were 15 years. These guys, if you just said, you have BYD in a year, it's going to sell 40,000 vehicles. That's phenomenal. But it's a different place today. Yeah. That's the difference. It's not just one brand coming to market. It's a whole group of brands coming from China. And also, what's happening today is that idea of brand loyalty. So in the year 2015, I think it was, the brand loyalty was 40% of the people were brand loyal. Today, it's less than 20%. So, and with electrification, people are more brand agnostic. They go from a BMW to a Hyundai to a BYD. They're more interested in the product. So, yeah, I think that so the Chinese have been successful by virtue of the environment in which they are today. Japanese, Koreans were successful much greater period of time, but the Chinese have just hit a sweet spot in terms of marketplace.
Yeah, I mean, it's a good point, but I suppose at the same time you could also argue that the Koreans have also really benefited from that kind of change over the last 3 or 4 years. If you look at their profile in the market, and maybe electrification has had a role to play with that, maybe the fact they still had product to sell post COVID, but you look at the Ioniq range. And the Kia range, it's now viewed as premium in the same breath as others. Steve?
I think that it's not fair on either the Japanese or the Koreans, or in a sense on the Chinese, to say the Chinese are so much better than the Koreans or were so much better than the Japanese. I think that the environment's changed not just because of loyalty, but also because of information. Is that the customers are spending a lot of time on online research. There's a lot more information available now than there was in the 2000s or the 1990s or even the 60s or 70s when Toyota first came in. And so when you had to rely in the past on your neighbour had a Toyota, therefore you learned something about it. Now, as I said earlier, people are going online. They're looking at customer reviews in Australia and Thailand and all over the place. And doing background checks on the company. That's new information. It gives them a level of confidence that it wasn't possible to get when the Japanese first came in. And I think that's the big game changer. Yeah. Yes, the Chinese brands are good and they're aggressive and the product's good, it's priced well, but the customers are much, much better informed and they can do their due diligence faster.
You mentioned due diligence. That was the final question I'm going to ask you is around advice to dealers. There is a bewildering choice. Hopefully there's some dealers out there in the audience. A bewildering choice of new brands coming to market. What due diligence should you go through in order to ensure you're in the best, you're choosing the right brands? We're going to go down the line.
Yeah, fine. First and foremost, product. That's what determines the success ultimately, and that product is a product in terms of its availability, but not just product now. It's a product that's coming. I mean, a really good example of that would be a Great Wall, or a really good car, but they haven't had anything that's come on until Haval, which is about to come through. So it's what's the product, its availability now, what's coming through, and that product in terms of should be assessed in terms of its style, its technology, and its affordability. If you get those three right, it's not so much about the badge anymore. It's about those three criteria on the product. So I would say to the dealer network, just take a long, hard look at the product itself. That will give you a reflection as to the strength of the whole of the franchise of the OEM as well. It's product which will determine this.
Steve?
We looked at this from an ICDP point of view. We said trajectory, product, and commitment. So trajectory is not just to share the rat, but how quickly it's growing. The product is obviously the quality of the product, but also I'd particularly pick on powertrains because one of the reasons the Motor J-Cou's done so well is because they're not EV focused. J7 at number 4 in September was on the back of a plug-in hybrid. There is no pure electric J7. And then commitment is about some illustration they're putting down roots. And with no offense to some of the brands represented here, a brand that's here with an NSC to me is better than a brand that's with a distributor, and a brand that's running it entirely from China, as Great Wall did at one point. I wouldn't touch them. As a dealer, I would not touch them. I think those are my three measures.
Okay, Dom?
So I think we touched on some really good points. I think the product development speed is interesting as well as how often you get the product out the door, because that can help or harm things like residual values. But I think for me it's about the sort of relationship and autonomy that you can create through that sort of symbiotic relationship. So I think products is obviously very important. You need to have a good product that you can sell, but actually how much autonomy will you as a dealer have in order to sort of have that entrepreneurial operating sort of standards in terms of being able to push product out into the market. And I think that's where the cultural piece comes in, which is vertical integration, very hierarchical Chinese global HQs, but giving enough autonomy to the dealerships. So I think those brands that you can really work with and have some autonomy with, I think will be really, really helpful.
Okay. A fascinating topic, as I'm sure you'll agree. I hope you got a lot out of this particular session, but we have unfortunately come to an end. There's plenty more for you to do out on the showroom floor. Go and see some of the brands. Go and ask them some of the questions that we were putting to the guys. There's lots for you to do over the next few hours. Please join me in thanking our panel: Tony Whitehorn, Steve Young, and Tom Briers. Thank you.